Yeah, let's blow this up nice and big. Get a good look at this down move. Get a quick percentage check. See what everybody's. This is from. I'm just going to go from the 48K high here. All right, let's be real. Let's keep this local right now. We'll jump up to the bigger number. But I mean, hello to the bottom. I mean, another 50% pullback. 47, 47%. You take this all the way to the all-time high. 63.28%. All right. Heard some people talking about 80%. Solana right now is down 80%. Do we want to even talk about Luna? Terra Luna? We understand what just happened there. You kidding me right now? How is that even possible? How is this thing worth 2 cents right now? 2 weeks ago, it was worth $110. When I read the white paper in the beginning, and I think I even told Fur Primal, I traded some for a profit. I bought it like $5 and sold it 12 or something. But I told Fur, I think I even told MJ, I was like, this is going to end bad. This isn't going to work. Why are people buying into this? You're going to launch a stable coin and they're going to back it with just Bitcoin. It's pretty insane. What the hell, man? Oh boy. But we live in clown world. So I would expect nothing less. Um, so we shoot down through the third standard deviation, which was at 26,103. There was a 95.4% chance that was going to rip back up and get back up inside the second standard deviation, 28,230. When you're working within the distribution and we're talking about probability percentage levels, these things are respected. You've got to trust the probabilities. Is a high probability, like a 99.7% probability, Bitcoin does not go below this range? Will a candle close outside that area every once in a while? Will there even be some continuation if we're talking about normal distribution? We didn't even get down to the Laplace. The 99.7 Laplace is at 23.9. If you think that was a nice bounce out of 23, if that would have hit the 99.7 Laplace, wow, you could have really ripped back up. But par for the course. We get a massive dump, which me and MJ were talking about. We were both sleeping. Kidding me right now? I would have gobbled up some more Solana. I bought a bunch at $44. I would have bought a bunch at 35. Holy crap. Shit's on sale. Again, are you kidding me? We getting these prices again, especially if these altcoins. Bitcoin's holding together. Consider. Ugh. So yeah, you drop down about $400 below that 3SD on the weekly, and man, it ripped right back up above the 2SD. 95.4% chance the weekly candle closes inside that range. It's just all math. It's all probabilities. That's all this is. It's simple. Trading is simple. And here's where I go into my rant. This is going to be for all the traders out there. When there's volatility like this, there's no excuse for people to be in a position of recovery. This is when fortunes are made. A lot of people aren't taking advantage of the market conditions. Instead, they're complaining about the volatility and losing money. Fortunes should be made right now. Why isn't that happening? Because people don't know how to trade volatility and they're sitting in eroding positions. Why is my question? Why are you doing that to yourself? You're the one doing it. And then you're crying on social media about it. Makes zero sense. You got to flip the script on this. You got to learn how to trade volatility. It's all about the probabilities. It's all about the distribution. It's about log returns, specifically the divergence between price action and log returns. Understanding where a move is at when you have indicators that can project a distribution model, right? 68.3 Laplace distribution range, 95.4% Laplace distribution range. Then you've got the 99.7. And you can follow this projection. And I'm telling you right now. So if this is all about probabilities, there is on this weekly candle, there's a 95.4% chance. And I go out on the limb on these projections because I know how powerful they are. That Bitcoin by the end of the week pulls back up inside 30,500 inside this projection, right? Not only do the current candle distribution levels come into effect, the entire distribution projection comes into effect, right? And I can show a million examples of how powerful the distribution is. We go on my favorite time frame right here. Let's just take a little peeky poo. So we do this. So a quick measurement here. It's at 11 bars. Sound effects. You don't need a soundboard when you got me. All right. Kept it inside the 95.4 here, right? On this move. But you can see immediately what happened, right? Boom, wham. This 90-minute candle slammed down right. It went a little bit past the 99.7 Laplace distribution range on that current 90-minute candle and bounced perfectly off the fourth standard distribution fourth standard deviation normal distribution. That's a tongue tire. And look at the pullback on that candle. This is why when you understand these levels, you'll understand the probabilities and where you're at in your freaking trade. This is not brain surgery. Is there a learning curve here? Yeah. And I'm going to be honest right now. It kicks most people right in the ass and they give up. Don't do that. Don't do that. Come on. Get this shit taken care of. So let's see if I back this up a little further. See what this looks like back here. 21 bars. So there's three basic rules. No, nothing there. There's three basic rules when you're trading volatility. And why do we keep it simple? Why does it need to be basic? Because you're dealing with something that is so volatile. You need to keep it simple. I'm not talking about charts. You need to be able to read charts like this, right? Maybe not all of it. When you get to the point where you've been studying this for years, you'll want this. It all means something, right? We've got volatility right here. We've got entropy down here. I use this entire side of this chart over here. I want to know when there is an outlier in the variance. What is variance? Variance is a spread of data around the mean, right? The standard deviation of returns is volatility. When the variance is moving away from the mean, you need to know how it's correlated. If it's negatively correlated, that resulting price action is going to move to the downside and it's going to move hard. When it's correlated positive, it's going to move to the top side and it's going to move hard. These are things you need to understand. You need to understand about the z-score of log returns and the returns oscillator and the Fisher transform. But Bilbo, Fisher, that's traditional technical analysis. The Fisher transforms price action into a normal distribution. It's why we use it. I use it a lot for divergence. When I'm seeing divergence on the z-score, the returns oscillator, and the Fisher, and then you throw in the DLP, this gets real powerful. You start to understand how to really trade the markets, right? This isn't fucking checkers, man. This is chess. You want to come and you want to trade the financial markets? You better be on your fucking A game. You better have the right tool bag, or you are going to get slaughtered out there. Do you understand who you're up against? Everybody wants to be a professional trader until they're a professional trader and they're getting their ass kicked. You are up against a behemoth that won't share this information with anybody. Do you think that they're trading traditional TA? Do you think these guys have got a fucking RSI and a Stoke up on their charts? Do you think they're looking at moving averages? No. This is a game of math, right? You were trying to tame a random market, for crying out loud. Here's a good example here too. Let me put this on the index and go to a weekly. Look at the entropy. Let me pop this up. This deserves full screen. This is what we're doing at Alpha Trading here. We're not dicking around, man. We make great indicators. All the volatility that's been in Bitcoin since, 2015, 2016, there has been a lot of trend on the bottom. It's when the entropy goes blue, right? Everything else is random. Here's the run up right here. I mean, I've studied all these charts so much, I can tell you what every one of these moves is. This is the first run up from 10K to 65, right? Trending. This is what entropy tells you what's going on. The volatility is trending. This is a no-brainer what's happening here, and it's positively correlated, right? Positively correlated. Look at the entropy right now, right? On the weekly, we're finally in trend again. Look at this price action. Okay. There's the first run up to 60. Where was it? Yeah, 65. Then we go into full randomness until now. And now I'm talking all the way up to the 70K all-time high. It wasn't even trending, right? It wasn't even trending. And I'm going to be honest right now, volatility, Let me see what was going on. Yeah, expanding volatility, positively correlated. That worked right into contracting negatively correlated volatility that actually got the candle that got the all-time high. So people don't understand about volatility, right? Here at Alpha Trading, we want to teach people how to trade like this, but you got to come. You got to join the Discord, right? We don't charge to teach you, but we do charge to get into the Discord. And you get a few indicators to start out. And the lowest level is $10 a month. And if you're tired of this bullshit of being led around by your nose, by the news, right? By other traders, by YouTube freaking Jimmy out there lying to everybody, come on over, man. We're here. But you need to understand what's going on in the markets for real. Traditional technical analysis are all lagging indicators. All our indicators are based on volatility and the log returns in entropy. We understand the distribution. When you start trading low time frame volatility, you are in a shark tank like you have no idea what you have done to yourself at this point. Do you have any idea what you're jumping into? Powerful algorithms that are going to gobble you up if you don't understand what's happening in the market. Not the relative strength index, not your little stochastics or your MACD bullshit. Come on, man. If you're using it, we all did. We were all there. We saw through the scam. People are like, what are you talking about? A scam? It's not a scam, you guys. It's bigger than you even realize. The same people that are making just wealth, that unimaginable wealth right now in the markets, are the ones that are pushing all of the traditional TA bullshit onto the masses, especially the retail traders, man. They're using retail traders as liquidity. But okay, that being said, there's 3 rules, right, that you need to follow. First off, if you want to become a professional trader and not a gambler, because I very rarely meet a professional trader online. They're all gamblers. Let's be real right now. So, first off, you cannot be emotionally attached to a trade. You're a professional. Act like it, right? This isn't an ego fucking contest to see who can get a better entry on a big long position through all the fucking pumps and valleys in Bitcoin. You trade that volatility up and down. You don't just sit in positions and then Bitcoin one day has a freaking 30-40% move and knocks you out of your position, liquidates your account. It's not worth it. Learn how to trade it all. Right? So that's the first thing. Don't be emotionally attached to your trade. Number 2, learn how to take profit. Again, this is not a fucking ego contest. This is you're a professional now. You're in this to make money. You don't have a paycheck coming in anymore. Mommy and daddy aren't buying your groceries or paying your rent. You're out on your own, all right? You want to be a big boy. You need to learn how to take profit. Right? Where do you take profit at? Distribution levels, price action volatility ranges. Guys, this is what this is right here. This is a money printer. Okay? If you're confused on what this indicator is with all these funky lines, this is a money printer. Don't get confused on what it is. And the third rule, right? Limit your losses. If I get into a position and the price turns around, goes below my entry, I market sell or market buy out of the freaking position. It's simple. Do you know how good of entries you're going to get when you learn how to volatility trade? You learn how to read the distribution. Your P&L, if you're really studying hard, it's limitless. Let's put it that way. Take your profit, limit your loss. You're not getting into positions to just sit in them. That's not what you do. When you get that figured out, it'll change you forever. Right? You'll be riding in this bus. You won't be in the Winer's bus. Right? I've seen so many posts that just people are like, if anybody needs mental health help or blah, blah, blah. And I just shake my head and go, man, Simp City. Kidding me right now? This is big boys play. Get your head out of your ass. Learn how to fucking trade. Simple, man. Really is. But you gotta come to fight with the right freaking weapons, man. You can't jump in that Shark Tank dicking around. You'll get chewed up alive. You got to know what these algos are thinking, right? That's what you're doing with these indicators. People look at these and just go, "What the?" You know? They're not making any sense, right? You haven't seen these, right? These aren't your normal indicators. These were coded in-house at Alpha Trading. Our guys are great. It's incredible. Geez, they're working on something new right now that's just like in borderline ridiculous. We won't need Andy in his future telling anymore. We'll know what the price of Bitcoin is going to be, right? The next 32 candles or 33 candles, or I mean, who knows? It's doable. What's this all about when you're doing this kind of stuff? When you're building indicators like this, you're trying to crack the code, trying to see through, right? What are the algos doing? That's all that matters. That's what's insane. If you're using traditional TA, boom, you're hello. It's not even close. Not even close. You got to be able to understand this stuff. It's fine. It's a learning curve, like I said, but if you give it a shot and you succeed, it's fantastic, especially in times like this. And one thing, people are like, well, they said this in the news and that in the news. And oh my God, you read this? And it's just like, look, the volatility creates the news. News doesn't create market conditions. Let's get this straight. Quit believing the bullshit. If you have the right tool bag and you learn how to read the distribution, the volatility, the entropy, comes crystal clear. So you gotta change your thought process. You gotta be able to read the market. It's only I mean, if you want to get ahead, unless you're just doing this, it's fun. You gamble, whatever. Then continue what you're doing. You're just being used as liquidity. If you've made some money, good for you, right? I mean, even a blind dog gets a bone every once in a while. No offense. If you're using traditional TA, you're a blind dog trying to get the bone, man. It's not doing anything for you. Show me your edge. Show me your edge. I'll show you something new. There's nothing in traditional TA you could show me that I'm just going to be like, wow. I'm going to look at the indicator immediately and be like, you're being lied to. All right. Let's see. Three. MJ, can you talk? If so, unmute yourself. You were
Yes,
talking in the
sir.
background or something.
I'm here. Can you hear me?
Let's see. On
Oh,
mute.
shit. Really? You can't hear
Hey,
me?
there you go. I unmuted you.
Oh, okay.
Yeah, earlier when you were on your phone call, yeah, we could all hear
Oh,
you.
really?
I muted you. It's all good.
This freaking. I don't know what's going on, man. My sound went haywire. My microphone system went haywire. But you can hear me okay?
Man, you got that funny tunnel sound again.
You know what? Let me check something here. Let me check something.
Yeah, I just wanted to get all that out, and then we'll take a peek at this market and what's going on. I mean, we did a little bit right in the beginning. We looked at freaking where we're at in the distribution. Let me reload this. Because yeah, this is, I mean, when you start going up here in these macro times, let's be real. These babies get respect. That's why we love it up here. Um, just to see the overall, what's going on. And me and MJ talked about this. You talk about a perfect bounce. I mean, I want to just reach through the screen and give some loving, right, to the distribution gods. You guys, this is the monthly chart. Me and MJ literally, I mean, for Christ's sake, we literally were talking about this yesterday of the monthly going down. Okay, we definitely agreed. We're going down more. It happened. We were both asleep. That sucks. I've been foaming at the mouth. My bank account probably would have got drained. But look at the perfect bounce. Okay. What are these two dots down here? You've got the second standard deviation normal distribution, and you've got the 95.4 Laplace distribution. The 95.4 Laplace was at 25,110. The second standard deviation, 25,548. Price action went dead between them at about 25,360. So powerful area right there. Why is that? Man, algos, man. The algos were down there. Big time. Boing. Nice. Nice freaking nice pull up. Good stuff. But I mean, got some intel. I mean, the mean on the monthly, this pink line is the mean, right? Mean of returns. And the mean of returns is probably going to drop somewhere down around 18.5, 19K. Now, that doesn't mean the price action has to go down there, but this is where the projected mean is going. It is. It is. Let me see something. That already, yep, I already should. It's all good. So let's go down here onto where did we see that at? Yeah, I think that James 3 day. All right, let's pull this back. So is what we're working with here. Send a little bit to the PQ. It just showed up. Oh yeah, yeah. Just scanning, right? There's a lot of free. I'll tell you what, man, that's beautiful div too, right there. Holy crap.
Yeah, that's
12,
good.
12 hour, man, that baby's prime. We're primed for a freaking especially this log return Z score on 12 hours really low. Really low. Bounce in the same area both times. Um, yeah, but look at the returns oscillator. Look at the higher lows. When you get a bounce with divergence off the zero mean, okay, can everybody, if you don't understand divergence, study up, get a chart, right? But look at all these lower lows on price action. Look at all the higher lows on the returns oscillator. What's that telling you? Is this a powerful move? Yeah, but the whole damn way down, especially right here, the return on your investment is diminishing. That's what divergence between returns and price action is telling you, right? We're getting another stab right here, and it's bouncing on the zero mean. This could easily, just on the 12-hour, I'll tell you what, I'd back it up a lot more. I'm not going to say anything if I was seeing it on some higher time frames. It's just not there. It's not there. Uh, yeah. But immediately, what's happening on the 4-hour? Yeah, a lot, just building over time. And I've been talking about this, correct? Price actions continued to drift on down, right? The Luna thing's a debacle. But that's the thing. People are going to come up with conspiracy theories, whatever, blah, blah, blah. It was a black swan. Who knew it was going to come? If you read the fucking white paper, you sure would have known at some point it was going to be a bad ending. But yeah, insanity. The thing's down. It was at $110 or something a couple weeks ago, 2, 3 weeks ago. Now it's a couple cents. Sanity. But look at all these higher lows on the 4-hour, just building, building, building. All these lows, though, every one of them, it was below the zero mean. Tell you what, right now, that could kick off a nice move if the 4-hour bounces like the 12 hours doing. Get another stab. Just this is a long-term time series. This is a lot of divergence building on a long-term time series. At some point, you have an explosive move. Very explosive. So weekly volatility still low. Yeah, 22. We got up a little bit with this weekly candle. It was, remember, it was down. Are we going to expand here? We'll see what happens. But like I said, right, we're starting to trend again. And I've talked about this. The next major trend we have on the weekly, Bitcoin's going to 6 digits, or we're going to see. Put it this way: if we have a lot of volatility, Bitcoin's either going to make its run to 100K, or we could drop another 10 and be very volatile in between like 18 and 30K. And that's how that volatility will play out. Or it's going to be a sustained run. You can't listen to the news. The news is bullshit. What I was getting to at Luna. Look at the charts. If you look at all the indicators that we've put together at Alpha Trading, you can see these moves coming before the freaking news comes out. The volatility creates the news. You could see that COVID dump coming for a month. It was bearing down. So yeah. It's all good. We're here for you. We're here for you. If you're one of those ones that needs to recover in times like this, I don't know what to tell you. All right. I mean, just in any investment, first off, I'm a full believer you should be in control of your own investments. If you're in crypto, you are. You're your own bank. But with traditional finance and stuff, I mean, I would be in charge of my own investment. You know, crypto. There's good stable coins, right? You can pull out a traditional position. Just go into cash. Is the dollar fuck? Hell yeah, it's fuck. Right? But guys, don't just sit in losing positions, man. But then you know what happens though? You get down around the bottom, and that's when people want to sell. That's when people are selling bottoms. That's when people are buying tops. Pretty crazy. Let's have it. Let's play over here. Let's play over here.
Just don't leave your funds on Coinbase.
Funds on Coinbase.
Did you see that article?
No. I even know what let me turn this off. Let's just get the pretty sure it's 81 candles. Goes back.
Wow, you even have it memorized?
That's sick. I got a sickness. There it is. That's Laplace. Laplace, boss. Laplace. Let me see. Let me switch this baby up to normal distribution. There we go. Okay. Let's go back to this run up real quick. A lot of people haven't seen this. Some have. There we go. So what you're looking at here, you're looking at the bell curve of normal distribution. All you brain surgeons out there that just probably remember the bell curve of normal distribution. School. Look at price action right now. What's been happening? Where did I start this projection? This is the beginning of the run up on Bitcoin from September 2015. Bitcoin was at $238.66. Okay. The move starts, immediately runs up to the first standard deviation. Wick rejects right off of it. Another run at it, rejection. Finally breaks through. Then you have about a 8-month run to the all-time high, right? Up at 20K. So not only did that wick go through the second standard deviation, there was a 95.4% probability that this monthly candle would not close outside of that second standard deviation range inside that bell curve right there, right? You see the little blue dot where the wick rejected hard off of? That's the third standard deviation on that current candle. On that current monthly candle, that was the third standard deviation. There was a 99.7% chance that that price action would not exceed that level. And there was a 95.4% chance that it would pull back to the second standard deviation. Did it do that? Yes. That month, that volatility we had, right? That was December 2017. Everybody remembers that madhouse. I was dragging all kinds of freaking profits on all those shit coins. But anyway, you run up to the 99.7 at the third standard deviation and immediately pull back to the 2SD because there was a 95.4% chance that monthly candle would close down there. Then it makes one more run up to the second standard deviation projection, and then we get the dump, and everybody's going, this is it, right? Media is burying Bitcoin for the 1,000th time. Bitcoin's going to die. We're going to $9, right? Bitcoin's going to zero. Where did Bitcoin bounce? Right at the top side of the first standard deviation, right? Made that run up to 14K. And then you see all this brewing right here up to that 14K high, and then this COVID dump. You could read this like the back of your hand if you knew what you were looking at. That this was coming. This wasn't a freaking black swan event. And just like this monthly candle that went to the 3SD, the COVID dump, where did it bounce from? Third standard deviation to the downside. Where did that monthly candle suck up to? Almost the first standard deviation. There's a 68.3% chance that monthly candle would close inside there. And then we take off for the party we've been having lately, the new all-time highs, right? And now this projection, I don't really value it too much out here anymore. That's why I'm just showing how, especially these two, how the first standard deviation and how these distribution levels on the current candles. You can look on this monthly. There's a lot of these dots hitting on the nose, right? The distribution is very powerful. Everybody should be wanting to learn about it in trading in general. Because I'll tell you what, the behemoth you're up against is crazy. Let's see. We're in this little pullback there. It's one of these lower time frames. Enough of that hogwash. We saw a bunch of bull div on the 12-hour. Same thing, actually, same thing on the freaking 90-minute, right? Overall, here's the low, right? These are all higher lows. Building, building, building. Same with the 45-minute. And this is the only damn thing I'll ever draw trend lines on, right? It's great for the returns oscillator. There we go. That's a beauty right there. Um, so yeah, and some nice 45-minute div, 90-minute div, 4-hour div. I mean, let's be honest. I mean, here was the lowest low here. I mean, over a long-term time series on the 15-minute, literally almost this whole trading day, it's all been higher lows. Little line, man. Having an outlier right now to the downside. Look at price action. Price action, we had the cross up, right? The reverse wave trend crossed back up the Fisher. What happens? Look where price action was. But then it's usually when this stuff happens, price action comes down. It doesn't matter which way the cross is happening when you're talking about reverse Fisher and reverse wave trend. When there's a cross, price action usually is going to come down and test the other side, right? This is a war. Maybe you didn't know it. They're going to go down there, right? Do the bulls mean business? They're going to protect this Fisher down here because they did in the wave trend. The Fisher's the man right now, apparently. We're talking low time frame. Let's see what happens here. We're going to bounce. We're going to get back up above it again. Everything starts on the low time frames. But look how low. The volatility was literally crushed at zeros on the 15-minute. We're getting a nice, steady expansion right now, negatively correlated. Look at the price action. When volatility expands, negatively correlated, price action moves down. When entropy starts to drop into trend, or even if it's just it's going further towards trend out of randomness, negatively correlated. All right. Volatility or entropy percentile. Entropy percentile expanding, negatively correlated. Now to continue. As soon as it starts to move, it's negatively correlated to right there. When it starts contracting, it goes positively correlated and the move continues down. Those of you in alpha trading that have been studying understand why. These indicators are special. Let's put it that way. They let you really know what's going on. Okay.
They are special.
Special.
So special.
I'm special. So special.
How you doing, man?
Hey,
I just popped in here for a while late and heard you delivering the brilliant truth to the unwashed masses.
Yes. Hear that, unwashed masses.
Right.
Learn how to trade volatility, or I'll be showing up in your village with a cart full of bread loaves for everybody. Don't worry, I'll keep you fed. I won't let you starve to death because you got liquidated.
Jetty, I'm gonna make you a nice meal.
What an absolutely delicious day of low time frame scalps, huh? Unreal.
Yeah. People are fucking crying on social media. Everybody, hopefully we recover. Oh, I'm wrecked. It's like you should be in that position. You should be in a position of creating wealth for yourself. Learn how to trade volatility. Quit dicking around and crying on social media, where I'm all for, if something's out of your control, right? I mean, you're in control of this. Especially if you're trading crypto. You are your own bank. Don't sit in bad positions. Get the hell out.
I mean, 5,000 down, 5,000 up on Bitcoin in a day. Come on, who's missing that and saying there's no good trades? What? What?
Volatility is so beautiful.
Charts people.
Making me want to cry.
Yeah.
Love that volatility. But here we go. And I'm right back to this weekly candle. I'm sticking to my fucking guns. This is all about probabilities. That wick ran through the third standard deviation normal distribution by about $300-400. And right now, at the moment, it's pulling back up. Okay. It's pulling back up. It's right now, it's inside the second standard deviation, 28,216. Why? Why did it run down underneath the third? And why did we get such a violent reaction that pulled back up? Literally, I mean, from the bottom, yeah, like you said, it went back up 5K almost. Because it's all about the probabilities. There was a 99.7% chance this weekly candle is not going to close outside that 3SD. And there's a 95.4% chance that was going to suck back up and get back up inside the second standard deviation. Now there's a 68.3% chance and a 95.4% chance on the freaking projection that this data set on the weekly closes up above about $30,500. So it's all about probabilities. It's not hard. Everybody's trying to complicate all this shit. It's all about probabilities. It's all about understanding the distribution, understanding volatility and entropy. And more importantly, understanding what the fuck a log return is. That's the hardest problem. For the long, when I first started, I was like a deer in headlights, just like we all were. What? What is this voodoo? But yeah, it's all about probabilities. And then in the end, it's about being able to recognize in the markets if there's more buyers than sellers or if there's more sellers than buyers. Don't complicate it. Don't look to the news. Oh my God, this is fuck. We're all. The volatility in the market creates the news. The news doesn't create the volatility. Been preaching about this forever. You talk to some of the most successful investors out there. I guarantee you 100% they're going to tell you the same damn thing. They're going to tell you the same thing. It's insanity. Quit listening to the news. Learn how to read the volatility. Understand what's happening in the market. Before, literally 99.9% of traders, retail traders, know. They're all just flying around blind. It's the blind leading the blind. YouTube Jimmy's out there. He's the Pied Piper. Got a mass of you folks. We're crying out loud, man. Time to wake up. I'm not trying to sell you no damn trading program. We don't have any sponsors, right? Maybe Trader Joe's. They definitely don't pay me.
Look, think about it this way: the market carries, right? The volatility is carried by the market, right? Volatility carries the market. Volatility ports the market. Media reports the market. Think about it that way.
Yeah. Here you go. They take that organic freaking market, that just scrumptious freaking free range market, that random, it's eating everything, right? It doesn't care what you look like. It's gobbling you alive. It loves the flesh of retail traders. And then, oh wow, my train jumped the track there. Man, I dropped the ball. I had a good one cooking too. Hopefully it reloads. Oh yeah. So they take that nice organic, right, free range market, and they repackage it and repurpose it and re-deliver it to the masses in the form of bullshit media. And then people are trying to react on something that's already been happening. They miss the boat. And then they cry on social media. And the media feeds the frenzy. Markets are on fire. And then you V-bottom out of the data set V-bottoms out of somewhere and just, then they'll be like, oh, well, we didn't see that coming. Like, yeah, well, we did. So yeah, that's where we're at on this weekly. I'm thinking and I don't think it's going to happen on the weekend. I'm thinking, probably, let's see. Let me go back over here onto the slower time frame. Yeah, I'm thinking I mean, look what just happened. We were just talking about it, right? It was down here. Boom, man, that thing sucked up and went up, rejected off the reverse wave trend. Perfectly right there. Where are we going to be by close? Where would I like to see it? In the daily range for sure. Because this baby's dropping. I'll tell you what, right now it's actually, we close in this area, we're good. Because this new daily range is, we're right on it, to be honest. We're right on it. It's right in here somewhere. To be safe, get the data set up here in the daily volatility range. That would be a good place to close. So we want to see BTC up, up another. I mean, we're talking $1,000. See what happens there. Give them that little bounce going into the end of the day, and then tomorrow, probably make that move to get back up inside that. The first standard deviation, yeah, first standard deviation. There you go. Or no, sorry. Yeah. 1SD. Up there, like above 30.6. But to be honest, that would the bottom of the weekly range has not been tested. And where is that at? That's right at about the 68.3 Laplace distribution to the top side on this weekly candle. We briefly, when we opened, went up a little bit, gave it a little test, and then it's been down ever since. 3SD run on the weekly. Guys, it doesn't happen often. I mean, this nice run to the first all-time high, it did a couple monthly candles. We got some, not really, man. Not 3SD. Yeah, we did right here. Then it pulled back, not quite inside the second, but yeah, it's been a minute. I mean, we had a 3SD right here on the 53% pullback. Or no, that was 52. Or no, that wasn't the, this was the whole 52. This big monthly candle though. All right, another wick right to the 3SD. Powerful. You see a lot of wicks to the 95.4 Laplace. But these distribution levels mean something. They are important. They are very important. So anyway, that's my rant for the day. You know what's going on in the markets. I'm not saying this can't go lower, right? And I'm very aware because of tools we have here at Alpha Trading where the mean of returns on the monthly is heading. And that mean of returns at some point here in probably about the next 6 months is going to be down around 18K, in between 18 and 19K. That doesn't mean price action has to go follow that down there. I'm just saying that's where the mean of the returns is heading. But of course it is. I mean, you look at the monthly chart. Yeah, big time. I mean, this has been heavy right here. This is going to create a nice down move in the mean of returns. Or the mean of returns is going to already, the mean of returns is already down. Price action is just following. Let's get it straight. All right. As Yasha beta tests it, he's a one-man wrecking machine. Who just popped in all late? He's scared. As we're getting ready to run my spiel about if you're on YouTube for the first time watching this, where you been? Been waiting for you. All right. The link to the Discord is in the description of all of our videos. Come on in, check out the shop channel. There's 2 different levels to our Discord. Open up a support ticket. Tell us what's on your mind. Ask questions. Don't just come in, blah, blah, blah. And definitely don't come in and be like, well, how much is your entire indicator package? I want to buy all these indicators. Don't do that. Come in and get used to us. It's $10 a month. Come in and see if it's something you want to dive into. Because I'm going to tell you right now, the learning curve is high. Most fail. Unfortunately, they give up, which is unfortunate. It really is. But you got to lay down the traditional TA and jump in head first. Just study. But yeah, I want to thank everybody for watching live. We've been having nice little groups lately, live in the Discord. Another bonus about being in the Discord, right? You can get in here. You can interact in these live streams. Anybody can speak up. A lot of people just like to listen, right? Kind of like me. I love to listen to myself talk about volatility. So it's a win-win. Let's see here. But we will be back tomorrow, last day of the trading week for traditional markets. I was going to get into traditional markets today. I'm saving it for tomorrow, right? And I'm going to go ahead and be honest here. We're probably going to do the stream a little early, which the guys over in Europe, Africa, you guys are going to like that because I want to be up. I want to be live streaming before traditional markets close. So let's just say right off the bat, 3 p.m. Eastern Standard Time tomorrow, we'll do the live stream. So we can be live for the last hour or Spy. I want to see what Spy's doing. But yeah, with all that being said, man, we'll see you guys tomorrow. 3 p.m. Eastern Standard Time. See ya.